Today is General Mills. The shares are higher after Citi upgraded it to a buy, saying investors are missing out on a good story that got lost in a beaten down sector. They said strong first quarter results were a source of optimism. General Mills beat across the board when it reported last week, seeing strength in pet food and pantry staples, thanks in part to stay-at-home habits. But shares are up just 3% this year, Nancy, as the reopening trade has taken hold. Do you agree with this call?
Not really, Kelly. I think you want to own a great story in a great sector at this stage in the market. And so, you've got a company that's got 1 to 2% top line growth, flat EPS guidance from the company, and input costs rising 7 to 8%. So it seems to me that there's probably better places to be, and that this is going to be a sort of muddler longer.
Julia?
Well, look, General Mills is all about the pet trend. They have all these different pet brands. And the fact is a lot of people got pets during the pandemic and they still have those pets. To me, one interesting angle here is the fact that as people have more hybrid work, maybe work from home some days, in the office others, I wonder if they're going to be cooking more or sort of continuing the cooking trend of the pandemic because they're not fully back in the office and going out for lunch every day.
Yes, I can confirm. Derek, maybe you can give us a little peek inside your household there, but there's a lot of cooking going on these days.
There's a lot of cooking going on these days. I used to go out to restaurants all the time. Now I have learned how to cook. I used to go to bars all the time. Now I've learned how to make cocktails. So there's been a lot of work that I used to rely on the service sector for that now has been definitely insourced because of the pandemic. So yes, I feel that very strongly.
But will you be back out there as soon as you can? Or, I mean, I would like to be, but the last time I tried to get, takeout penne pasta vodka sauce was $27. That was the last end of that.
So for me, it was a cacio e pepe. I respect the penne vodka. Look, I want to go back out to restaurants. I want to go out to bars. Like I love restaurants and the bar scene. It's one of my favorite things about living in a city, and it's why I hope to always live in a city. But at the same time, I'm never going to forget the skills that I've learned, and so I think the threshold has been raised. Like I make a pretty good cocktail. I make a pretty good cacio e pepe. So in a way, that means that I really need that bar to be pretty high to get me out, and that might have some trickle down effects for sort of the middle class of restaurants because they might not essentially compete very well against my own kitchen.
I agree. I'm thinking to myself, I'm not half bad. I never thought I'd say that, but these days I'm not half bad. All right, but I still think Nancy's point about the investment kind of hangs over as the conclusion to all of this. So let's move along and talk about the deal that was just scrapped between Zoom and Five9. This one got Kathy Wood to weigh in and everything. Let's dig into it for a second. The Five9 shareholders rejected it. It was about a $15 billion takeover bid for the cloud contact center company. They just thought the 13% premium on shares for this takeover wasn't enough. Square paid 30% to Afterpay in that deal. Zoom shares have been down 30%, Julia, since the deal was announced. So Kathy Wood's take on all of this is that, Five9's gonna maybe wish that, I don't want to put words into her mouth, but that they might come back at this one and sort of think it was a missed opportunity.
Well, look, there are a number of analysts that upgraded Five9 shares on this, thinking that there is more upside and that Five9 could have gotten a higher premium. But to me, Kelly, the really interesting angle here is Zoom. What does this say about what Zoom needs for its next leg of growth? The fact that it needs to focus on the enterprise customer, and that's, speaking of hybrid work, that's where their business is really going down the line.
Nancy?
I mean, I think the sell-off in the Zoom price obviously was the reason that this deal was scrapped, and now they're both up on this news. If it were me, and we don't own either, but I would probably be dipping my toe into Zoom here, simply because this is a company that's got earnings. They're the industry leader. They can figure it out. If it's not this acquisition, it'll be another.
All right, and I see Derek nodding in agreement there. So let's move along. Talk about the superhero settlement in a case that rocked Hollywood. Scarlett Johansson and Disney agreeing to settle her breach of contract suit that she brought back in July when she claimed that Disney hurt her potential earnings by releasing Black Widow on Disney Plus at the same time it was released in theaters. Her salary was tied to box office performance. Disney accused her of ignoring the dangers of entering movie theaters during the pandemic, kind of being, sort of misreading the public at that moment. Anyway, they said she had already been paid $20 million for her work on the film. Both sides said they were pleased to resolve their differences. Derek, exact terms weren't disclosed. What did we learn here? I don't know if Derek froze there. Julia, what did we learn here?
Well, what we learned here is that studios want flexibility going forward, and they know they're going to have to pay stars for it. Before things theatrical performance was directly tied to the outcomes both for producers, directors, and movie stars. Going forward, it's going to be a lot about flexibility and also about the value of streaming. It's notable that they didn't disclose the terms. One report from Deadline.com said that Scarlett Johansson is getting paid $40 million all in. So these are big numbers here, but it also doesn't look good for either party that it had to go to a lawsuit. I think going forward, we're going to see whether it's movie stars or studios try to avoid the scrutiny of being in the public sphere with a very high-profile lawsuit like that.
Derek, what would you add to that?
Sure. Sorry, I had to quickly do some reporting on the deal. So look, basically, ScarJo is the biggest female star in the world. She is uniquely in a place of power to fight for actors, to redefine the way that streaming revenue is divided among actors. And I think that's what this is about. How is this going to play down the line? My understanding is that Emma Stone got a great deal for the Cruella sequel precisely because of ScarJo's settlement with Disney, or the prospect of her settlement with Disney. So this isn't just about Disney versus ScarJo. This is about the way that stars that tend to be executive producers that get points on box office or on streaming revenue are going to benefit from the total revenue made from these projects down the line. That's really what it's about.